Corporate earnings reports, they can feel like you're trying to read a completely different language, right? All this jargon, crazy charts, and just huge numbers. Well, today, we're going to translate one for you. We're diving into the latest report from the global banking giant BBVA to figure out what story these numbers are really telling us.
So every 3 months, it's the same deal. These massive global banks, they have to open up their books and give everyone a financial health check. It's like their quarterly report card, showing the whole world exactly how they're doing. And yeah, it's a big moment of truth. For investors, for analysts, for the entire market, really.
So our job here is to cut through all that noise and get right to the good stuff. What did we actually learn from BBVA's latest checkup? Was it a good quarter, a bad one? And maybe more importantly, why? Let's get into it.
Okay, first up, BBVA's Q3 report card. Let's start with the headline number, the one big figure that kind of sums up the whole story of the past 9 months.
And there it is, almost 8 billion euros. That's the net attributable profit for just the first 9 months of 2025. I mean, let's just let that sink in for a second. That is a seriously powerful result, and it points to some major sustained profitability.
And you don't have to take my word for it. This is how the bank itself described it in their report. Outstanding, profitable growth. I mean, they didn't just say good or solid. They went with outstanding. So that begs the question, what's actually driving all this success? All right, let's look at how the bank actually grows. We're going to pop the hood and check out the engine that's powering these huge profits. And really, it boils down to 2 simple things: getting more customers and then doing more business with them.
First up, new customers. Get this, in just 9 months, BBVA brought in 8.7 million new clients. That is a staggering number. I mean, that's like the entire population of a major city. It's the absolute fuel for their growth engine.
So what happens when you get millions of new customers? Well, your lending business explodes. Total loans shot up by a massive 16% compared to last year. See how that works? It's a direct result of that incredible customer growth we just talked about.
So this is basically Banking 101, how a bank actually makes its money. It's pretty much these 2 things. You've got net interest income, that's the profit from loans, and then you have net fees and commissions. That's what they charge you for all their services. And for a bank to be really, truly healthy, you want to see both of these growing like crazy.
And would you look at that? That's exactly what's happening. Net interest income, up over 18%. Fees, up over 15% year over year. This tells us that the bank's core engine isn't just running smoothly. No, it is firing on all cylinders.
Okay, so we know the bank is making a ton of money. But here's the other side of the coin. Is it stable? Is it safe? To figure that out, let's look at the scorecard that analysts use to grade a bank's financial health.
Now, you're going to hear analysts throw this term around all the time, the CET1 ratio. I know it sounds super complicated, but the idea is actually pretty simple. Just think of it as the bank's financial safety cushion. It's the buffer they have to absorb any unexpected hits. So the higher the number, the safer the bank.
So how big is BBVA's cushion? Well, it's pretty darn big. Their CET1 ratio is sitting at 13.42%. That's way above their own target of between 11.5 and 12%. For regulators and for the market, this is a huge green flag. It says, hey, we're on really solid ground here.
So how did they build that cushion up? This chart here, it's called a waterfall chart. It shows it perfectly. See that first big blue chunk on the left? That's profit generation. It gave a massive boost to their capital. They're literally taking the money they earn and turning it directly into a bigger, fatter safety cushion. Okay, next step on the scorecard is efficiency. This one's easy to get your head around. It just tells you how much it costs the bank to make a euro. And just like with your own budget at home, the lower that number, the better. It's a sign of a lean, mean, well-run business.
But check this out. At 38.2%, BBVA's efficiency ratio is actually considered one of the best in the industry. Think about it. For every single euro they brought in, they only had to spend about 38 cents to earn it. That's a huge competitive advantage. It means more cash left over to invest in things like technology, and it makes them way more resilient if the economy takes a downturn.
Now, BBVA isn't just a Spanish bank. It's a global one. So its success story isn't just happening in one place. So let's take a quick trip around the world, a little tour of 2 of their most important markets to see how things are playing out on the global map.
First stop on our tour, Mexico. And let me tell you, for BBVA, Mexico isn't just another spot on the map. It's an absolute powerhouse, a real engine for the group's profits.
And you can see that power right here in the numbers. Just look at that steady upward march of those bars. Quarter after quarter, revenues in Mexico just keep climbing. This provides a massive and super reliable stream of cash for the whole bank.
Okay, next, let's hop on a plane back to the bank's home turf, Spain. Now, the story here isn't so much about that explosive growth we saw in Mexico. It's more about solid, steady, reliable performance.
And just like in Mexico, the trend is definitely positive. The growth might be a bit more modest, sure, but it's steady as a rock. It really proves that the bank's home market is that solid foundation that the rest of their global business is built on.
Okay, so we've seen the impressive results, and we've looked under the hood at the engine that's driving them. But what does all this mean for what's next? Let's zoom out and take a look at the road ahead for BBVA.
So if we're going to sum this whole thing up, what are the key takeaways? Well, first, you've got super strong profits. Second, they're turning those profits into a rock-solid capital cushion. Third, they're growing their customer base like crazy. And fourth, they're doing it all while running one of the most efficient operations out there.
But there's a really important piece of context here. All of this success happened in a world of rising interest rates, which, let's be honest, is fantastic for bank profits. So the huge question now is, what happens next? As central banks start to signal that rates have peaked, can BBVA keep this powerful engine running at full speed? That is the big challenge they're facing on the road ahead.